You're with us here on BTTV. Let's take a look at how markets are doing this afternoon, and it's good to see that green on the screen. We've got a resounding number of advances today. State Bank of India, in fact, up 5%, so it's looking really strong. We'll bring up some of the other gainers for you on the index, but Nifty's up 1.5%, 17,600 almost is around the point that we're trading at, and overall things are looking good. Adani Enterprises also back on the uptick as we've seen the last few sessions. So lots of stocks that are in fact snapping now a losing streak and getting back into the action. Let's take a look at some of those gainers on your screen. Adani Enterprises up 17%. Some of the other index movers as well we'll bring up for you. Adani Ports, another 10% there. SBI up 5%. So a whole host of stocks that are actually looking on the bright side in today's session. Sneha Poddar joining us. Sneha, what are you making of the market sentiment this afternoon? It's a happy Friday.
Yeah, good afternoon. So market sentiments have definitely turned positive, and the main reason behind it is the dovish commentary from one of the US Fed officials. So as we all know, so far the post few recent hawkish commentaries from other US Fed officials, market was expecting actually 50 bips rate hike in the upcoming monetary policy. But now, post yesterday's commentary from another official, market is now looking at 25 bips rate hike, and moreover, as per the official, the rate hike might get an end towards the late summer, so which is a big positive that the market is reading into, because that is the biggest concern right now in the market. So definitely the US Fed, like the dovish outlook which has come out yesterday, has been the key reason behind the turn in the market sentiments.
Okay, that's the reason, but then are you saying that it's sustainable or that you have doubts, Sneha? What's your outlook? Because we've seen incredible weakness the last few sessions, on the back of what we saw in the Adani Group stocks and otherwise. What's your outlook going forward?
Okay. So see, the outlook has slightly turned positive because market has corrected, it has already corrected by around 8 to 9%, and as compared to the global markets, which have seen a good up move. So the valuations have become a little attractive. So that is one reason which might, lead to some short bounce. And moreover, some of the key events that have taken place recently have turned the outlook positive. So as I mentioned, the commentary from the dovish commentary from the Fed has actually turned the table now. Now it has to be seen, on the 15th 16th is the next monetary policy of US. So exactly what happens, what rate hike the Fed takes, and what is the outlook that they give, that would actually provide the true direction to the market. But till that time, at least the some positivity has definitely come in, because it provides some relief. And secondly, if you look at some of the other macro data points, the domestic macro data points, that is the GST collection, the services PMI data that has come today. So these are pointing towards the good health of the overall Indian economy. So overall things are looking bright, and if the rate hike takes a pause mid-summer, as per yesterday's statement, if that really happens, then RBI would definitely follow the US footsteps and would also take a pause, which would then, result in which would actually then help the corporate earnings, which, have moderated a little. And there was a fear that if the rate hike continues, then probably the earnings downgrade might start kicking in. So if the rate pause does come in, then at least, we can be hopeful that the earnings trajectory, which has been healthy for so far, should continue going ahead as well, and then that would actually drive the overall the positive trajectory in the Nifty as well.
Okay. What are you focusing on then, Sneha? Let's take a look at SBI. It's up 5% today, and this could be multiple factors, of course, but some relief with the Supreme Court also, indicating that they're going to be looking deeply into that regulatory framework and with regards to what happened with the Adani Group of stocks. But what's your view on SBI?
So we are definitely positive on SBI because SBI has been underperforming for past 2 to 3 months, and we believe SBI is one of the best stock among the PSU banks, given the kind of growth trajectory that the bank has been witnessing continuously quarter after quarter, and moreover, its asset quality has improved substantially. So we are positive on SBI because it is like well placed to actually benefit from the credit upcycle that we are witnessing, given the government's thrust on the overall infrastructure development, overall capital expenditure. Definitely SBI would be best placed to actually capture this growth.
Okay. What else would you buy at lower levels? Metals today are up 3.5%. Haven't seen too many of those names on anyone's buy list. But what would you be looking at as markets start to rebound?
We are actually currently liking these sectors like auto, IT, BFSI, and in industrial. So these are the sectors wherein we would actually like to add names into our portfolio. And the reason being, like, if you talk about autos, the demand revival has been sustaining. I mean, it started about from the start of FY23, and continuously the demand has sustained. And with the supply pressures easing out and with the raw material cost coming down, so definitely, like, these two factors combined would really drive strong earnings growth for the auto companies. And especially when we compare it to their sharp underperformance over last 4 to 5 years, wherein the earnings were literally flat or poor over the last 5 years. So when we compare it to that, we really see a sharp earnings recovery from here for the auto companies. So auto is one sector wherein, like, we are really positive. Secondly is BFSI. As I mentioned, that the credit cycle has just started its uptrend. So BFSI is one space wherein the credit demand would remain strong given the overall government's thrust on capex. And secondly, with the asset quality improving substantially, definitely the banking sector would really benefit from here. And like, despite the rally that we have seen in the banking stocks over last 1 year, still the valuations are pretty comfortable. So there is still room for further upside. So banking is another space that we are comfortable. And thirdly, IT is one space wherein one can really look, though there are, like, certain macro headwinds, and the some pain points would remain for say next 2 to 3 quarters. But when we look at the long term structural story, IT is really one space wherein, like, we would recommend buying at these levels. So yeah, these three are the sectors, and apart from this industrial sector, because that would tremendously benefit from the government's thrust on the capex cycle.
Okay, within these pockets as well, specific stocks, auto for instance, Tata Motors, they've crossed that 50 lakh passenger vehicle production milestone now. Most of the auto majors have seen a decent uptick this time around, even though some concerns still around the semiconductor shortage and how that may impact things going forward. Within the auto pack, what are you looking at? Two-wheelers, four-wheelers, which are the names that stand out to you?
Okay, so within the auto pack, we are actually looking at the CV players and the PV players. That's what we prefer. Actually, two-wheeler sector, though they have witnessed some recovery, but then the exports continue to be a pain point for them. So we prefer private vehicle. We prefer private vehicles over the four-wheeler vehicles over the two-wheeler vehicles, and the main reason is the four-wheelers continue to see robust demand. Especially, like, all the companies, what they've done is they have done many new product launches. They have revamped their overall product portfolio, so which has led to the improvement in the overall product mix. So improvement in the product mix, along with the robust demand, and with the easing of the supply chain issues, so the PV segment really continues to benefit big way. So Maruti is one of our topic within this space, wherein Maruti is aggressively launching good new models under the SUV segment, which was the a big gap for the company so far. But now with the launches coming up in this gap, the company would be able to would be able to be present across the segments, and thus with the improvement in the product mix, the company would definitely benefit. Apart from the PV, CV is another space wherein we are seeing very strong demand. So Ashok Leyland is one player which we are really positive upon. We like even Tata Motors. So basically, what is happening is with the government pushing the infrastructure development and the overall with industrial capex picking up. So the demand for CV is very robust, and if you look at the numbers, the recent numbers have been the demand has been continuously growing at a rate of like almost 30-40%. So the cycle has definitely turned for the CV players, and thus we like Ashok Leyland because now the company is has again started regaining its market share, which it had lost during the last downturn. So now the company has started regaining its market share, which really makes us positive on Ashok Leyland.
What about broader markets? Anything that you're looking at there, or are you also looking to stick with some of those frontline names?
So, in the broader market, I mean, there's some, stocks, stock specific, one can take the action wherein, the fundamentals remain intact, but then just because of the certain news flows, the stocks corrected a lot. So, those names can definitely be looked into. But at this juncture, we would prefer to stick to, the large caps till further clarity really emerges with regards to the interest rate cycle. So we would prefer large cap, but yeah, selectively one can look at the mid caps and the small caps, because definitely with the recent downfall, there are certain pockets wherein a good opportunity is definitely available.
Okay, fair enough. From the Adani Group stocks, anything that you'd pick up at lower levels?
Sorry, we are not tracking this subject.
Okay, fair enough. You also mentioned BFSI. So, again, from that segment, what are you looking at? Are you looking at some of the names that are primarily focusing on retail? Would you look at any of the PSU picks from that basket? Would you prefer some of the other ancillary plays, for instance, from associate pockets like insurance? Where are you looking in that financial segment?
Okay. So in the BFSI space, we are preferring the private banks and the PSU banks more largely. And among the PSU banks, as I mentioned, that SBI is our one of the preferred picks. But then apart from SBI, one can also look at BOB, which is Bank of Baroda, wherein the bank has tremendously improved its asset quality, and the credit growth has been tremendous for the bank. So definitely Bank of Baroda is one PSU banks that one can look at. Among the private banks, we like HDFC Bank, ICICI Bank, and Axis Bank. I mean, these three banks have been really doing well. More so, we like ICICI Bank as the bank has really a good CASA mix of around 45-50%, and a higher proportion of the floating rate loans. So, which would really benefit the bank in the case of rising rate scenario. ICICI Bank is one of the preferred picks. If we talk about the mid cap banks, then one can really look at IDFC first, because in case of IDFC first, what is happening is that the drag from their wholesale book has been continuously reducing, while their focus has shifted towards the retail and the retail and the corporate books. Towards in that segment, the bank is really witnessing a healthy growth, and even their asset quality, they have been able to improve substantially. And now with the recent preferential allotment that was seen, the bank would be able to further grow its loan book, especially in the retail segment. So we are liking IDFC First among the private space. And apart from IDFC First, one can also look at Federal Bank, wherein, like in the recent analyst meet, the bank really pointed towards their longer term picture, and wherein, like, they talked about the ROAs moving towards the 2% trajectory. So yeah, these are few names, select names, which we are really positive on.
All right, any tips, in terms of triggers, outlook, or anything that you would suggest keeping in mind as we kickstart a fresh trading week on Monday, given the kind of gains that we seem to be closing with today?
Okay. So next week there are key economic events to watch out for. On the like domestic front, we have the fortnightly seismic loan growth data, which would be one key event that really people do follow. So that would be important for the market. Secondly, China's import export data would be there. So that is another factor which would influence the global markets. Apart from this, on the domestic front, we have the IP data. So that would be another key data point. So, but the main actually trigger would be the 15 days down the line, when US monetary policy is scheduled on 15/16, and actually that would provide the clear direction as to what rate hike the Fed takes, and what is the kind of commentary they come out with. So that would be providing a clear picture. But then till then, the smaller events, that is other macro data points, would definitely keep the markets range bound. So overall, what we're expecting is that probably the market would move in a range for the next 15-20 days, but with a slightly positive momentum. And post the US Fed outcome, we would get a fresh direction as to either side, where the market should move.
Great. Thank you so much, Sneha. Good chatting with you today, and have a good weekend. Thanks for joining us. Markets ending on a high this Friday. Let's see what else is in store for us next week, but clearly 1.5% higher. This Friday, things start to be looking a little bit better after a few sessions of decline. Thanks for watching. What does a Supreme Court verdict really mean? Does it imply a big change is coming in the regulatory framework? To answer these questions, we're joined by one of the top legal luminaries in India, Ryan Karanjiwala, Managing Partner of Karanjiwala & Co. Ryan, thanks so much for being with us on the show today. I've been looking forward to first getting your reaction to the Supreme Court